You all, are you running a trust or NGO? If so, you must comply with the latest audit requirements to avoid losing a tax exemption. Audit rules for trust and NGOs. Avoid losing tax exemption. See, the Finance Act 2022 has introduced a stricter audit rules for non-profit organizations, NPOs, trust society, Section 8 companies. Failing to comply could mean losing exemptions under Section 1023C and 12A and paying higher rate of taxes. In this video, we will cover who needs to file an audit report and what details must be included and the consequences of non-compliance and how to ensure your trust NGOs stay compliant. Stay till the end to avoid costly mistakes. So why NPOs need to file an audit report? Under Section 12A and Section 1023C, NPO must file an audit report to claim tax exemptions. Financial year from 23-24 onwards, failure to file the audit reports on time means no exemption. The Income Tax Department now requires a more detailed audit report to ensure transparency. So let's break down what this audit report must contain. The key details required in the audit report: the trustee and beneficial owner information, full details of settlor, trustees, and key shareholders, and books of accounts must confirm whether the books are properly maintained. And the business undertaking details, if the trust has a business, full details must be disclosed. TDS and receipts reconciliation, ensure proper tax deduction under Section 194C, 194Z, 194H, 194Q. Reconciliation of donations must match Form 10BD donors list details filing. Foreign contributions, NGOs receiving foreign funds must report details. High value payments above 50 lakh trust must provide party-wise details. Mode of expenditure, separate bifurcation of electronic versus cash payments. Violations and transactions with specified persons. Section 115 BBI and 1310 now require strict compliance. If any of these are missing, your trust could face tax scrutiny. Consequences of non-compliance. What happens if an NPO doesn't submit the audit report on time? Then loss of tax exemption, income will be taxed as per sections. Hefty penalties. Trust may face tax demands due to denied exemptions and legal scrutiny. Non-compliance could invite tax department investigations. To avoid these risks, ensure timely filing and full compliance. So how to comply? Step 1, maintain proper books of accounts and records. Step 2, hire a qualified CA to audit accounts. Step 3, submit the audit report in Form 10B and 10BB before the due date. Submit the audit reports in Form 10B or 10BB before the due date. Step 4, reconcile donations, foreign remittance, and major payments. Step 5, avoid cash transactions over 2,000 rupees to maintain transparency. Following these steps will help your NGO or trust to stay compliant and avoid tax issues. The conclusion: if you run an NPO or trust, make sure your audit report is properly filed. Failure to comply can cost your tax exemptions. If you found this video helpful, hit like button. Drop your questions in the comments. Subscribe for more updates on tax and compliance for NPOs. Turn on notifications if you don't miss important updates. Thank you.